So tomorrow is a very important day in the market. As you can see today, we did have a breakout above this level. We gapped down below the channel we've been trading within on SPY the last week or so, and this did end up having a bid today and continue to the upside for a pretty strong candle close. However, if you look here on the daily chart, you can see that I have a lot of vertical lines on my chart here, and this is what I call a cycle. These are how I derive a lot of my reversal dates, or at least one of the means of which I am able to derive these reversal dates. This is one example of them, and this cycle specifically is an 18-day cycle. So every single blue line that you see, the vertical blue line, is every 18 days. And what's interesting, if you notice what happens with price action on each of these days, you can see that there's always a reversal to the opposite direction compared to how price traded going into that day. For example, back here on the 20th of January, we were trading down for 3 days prior, and then we went right into this date, and then it bounced straight off of it. So this prompted a reversal to the upside. Over here, same exact thing applied. We were trading down into it, and this ended up being the exact bottom, as you can see from the wick here, that we made before continuing to the upside. The same exact thing can apply to a reversal to the downside. We were going up into this day, or at least the overall momentum was up into this day, and right on this day, it ended up being a reversal to the downside on November 1st here, and we continued down for another 3 days before continuing upwards after. And you can see it literally works almost every single time throughout this year. Another perfect example over here, where I actually remember taking a short setup off of, was we had 4 up days that prompted a mini short squeeze rally back here in early September, and this ended up being a reversal yet again to the downside off of this day. So this is a very critical cycle, and I don't share many of my cycles just because if they do get used by a lot of people and they go mainstream, then they'll stop working entirely. You have to remember that only way you can be profitable in the market is if you have an edge, and the only way you have an edge is if not that many other people also have that edge, because then it's not unique, and then everybody knows it and people can hedge against it, and it can be expected or front ran, et cetera, et cetera. So this is one basic one that I use. Again, I have many other ones that I use as well, but this was something interesting with this one, and why I wanted to share it in the video today is we just hit it today, this exact date on February 15th, and this would be a prime area for a reversal. Again, could be the day of, or it could be the day after, as we saw from back over here in early September. The day of ended up being up, but then the day after was a major gap down, followed by some more downside. So what I'm interested in is, will we see some more downside tomorrow? And if so, if we saw that downside, would it go back and revert into this channel? Because if that were the case, that would mean that there was 2 daily closes above the channel, had a hard rejection, and if we close back into this channel, like I just said before, that would mean that this is a fake out, and we would undoubtedly see the lower end of this channel and likely see a continuation downward for, at the bare minimum, a retest of this line before any further downside after. So again, this is just one variable that I'm sharing with you in terms of this cycle, but this is something that I'm watching. We also are still below those 2 key dark pool prints over here that we saw from last week, the 415.20 and 416.70-ish, both this range up here. We still are below that. We are above the one that came in from today, 1.8 billion in premium for the 412.79 level. So that is a little bit more promising for those short-term bulls that see more upside. But again, we're still below the mega ones that we saw around those 3 billion plus range in terms of overall dark pool premium, and that was in this 415 to 416 mid range. So personally, I'm very interested to see what happens tomorrow and then Friday, which is Opex, which tends to go either way. We've seen some crazy rallies on Opex, seen some crazy downside on Opex, and also just straight up chop where nothing really happened the whole day. So really, it's a complete coin toss for what can happen on that day. But the next 2 days, very crucial, especially if this reversal is able to play out tomorrow. So just wanted to give you guys the heads up of what I'm seeing here with this cycle analysis. Again, if you look back and back test this throughout all of 2022, it literally works almost every single time, which is very rare to see a cycle that works with almost 100% accuracy. Like, it even caught the exact top that we had here back on August 16th. This was the major top that formed before an 800-point drawdown on SPX afterwards. And the reversals don't have to be as large as we saw from up here for 800 points. They could be minor, but still, that's something that is tradable. Like something up here, we had 3 days to the downside after this day over here. So very crucial. Do note this for tomorrow. This is a very consistent cycle. Again, nothing is 100% in the market ever, but still, this is something that you do want to watch for and could be helpful in your overall trading. So do mark it on your charts, use it if that you want to. And if you're new here, subscribe to the channel. I may share some of these other cycles that I have in the future as well. Additionally, with the potential of a reversal tomorrow, and also, by the way, as you guys know, if you have been watching our channel, I am bearish still, and that may seem ridiculous to some people. And also, by the way, I still think we're going to get new lows at some point this year. Again, my personal opinion based on all the variables that I see. Yes, we have seen a lot of short covering as of recent because that's what this is so far. But let me remind you, every single time we've seen short covering in the past, whether it be up here, back here in end of March, early April, it has always had the same outcome. And just based on history, if you look back to the dot-com bubble as well as the financial crisis, which, by the way, right now we are raising rates super quick. And even though people are predicting a pivot, every single time that there has been some form of a pivot, we end up falling even further and made new lows after the pivot was made. So even if the Fed decides to pivot, let's say after the March rate hike, which is expected so far, still just based on history, we would make new lows. Again, just based on the other times. Does history have to repeat itself? No. As always, there could be differentiating outcomes, but I rather be on the side where there is hard data to support it rather than just looking at current price action of the short term and thinking that we're going to go to all-time highs for whatever reason, just because we broke a trend line that's right here. Yes, it's a crucial trend line, but we still just broke that and we saw a lot of short covering price action to the upside. Personally, I don't think that's as a viable candidate, but again, everyone can have their own opinion. One thing I did notice in the flow today was a lot of this 400 strike getting hit. We saw 1.1 million in premium here for the 400 strike, 317 expiration. So this is pretty close. This is only 1 month out. Characteristically, in the past month to 2 months, we've seen most of the major put flow in the form of longer term expirations. We've seen a lot of those June expirations, May, and then a lot of April as well. The large, like 14 million plus order that we saw from last week, that was an April expiration. So I found it interesting that today we were seeing a lot of these, first of all, 400 strikes. You can see right here, over here, down here, a lot of these 400 strikes that were 317 in expiration. That was a bit odd to look at. And then again, most of the calls that we saw today, which by the way, it was only 11% calls to 89% puts. If you filter here for above 500,000 in premium, I wanted to see what the whales were doing. Most of these calls were pretty far in the money, so I personally am not paying attention to them too much. But again, a lot of those 400 strikes getting hit throughout the day, and a pretty absurd print early in the session for this 3 million in premium for the 374 strike. This was only 95 cents to get because it also was the 317 expiration. So whether this was a hedge for protection or just an actual bet, a pretty unusual order to see early in the session. So I am going to be monitoring this one to see if there is follow through. But again, most of these, even the more conservative bets on the 400 strike, we're looking at a lot of those today. So we'll see if there is more follow up throughout the end of the week. And last note here, the Dow is still channel bound. It's been channel bound for a long time now, since the end of January, within this channel, roughly this bottom line to the top blue line over here. It is on the higher range of the channel, but it's had a really difficult time breaking out. And personally, I think this is a form of distribution for further downside after. And one of the main reasons why it's had a difficult time breaking out is because of the dollar right here. The dollar's seen a ton of strength as of lately. If you look over here just at the weekly chart, you can see it had a major weekly pickup candle, and then now even within this week has gotten picked up as well. So it looks like it's en route to this 105-ish range. There can be pullbacks along the way, but for the most part, the trend has been up. Had a very big pickup candle here the week of January 30th. So this is making the Dow weaker, which again, the Dow was the first of the indexes. If you look back to over here, was the first of the indexes to start this big upward move from back here in early October, even before the S&P 500 saw its upward move start. So this was one of the main leaders, also one of the strongest back here, and now it's starting to become one of the weakest, or it's having a lot of difficulty compared to SPY and then also tech, which has just been on a tear because a lot of those short covering flows. So continue to watch this, because if it does roll over, it can be a coming sign of further market weakness on the S&P 500 as well as NASDAQ, because this was the case for the inverse when we did end up going up. But other than that though, appreciate you guys watching this video. We'll see what happens with the rest of the week, and I'll see you guys next time on Sunday.